Happy Tuesday, everybody. Today is Tuesday, May 25th, 2001. I hope everyone is doing well. Last week was another volatile week in all of the markets, especially crypto. We saw that. We don't talk about that a lot here, but that market was all over the place last week. There were reports from JP Morgan that the institutional side was getting out of that. And that was just after a month ago when they were talking about the institutional side was getting into it. So it's a crazy space. You'll see right now it could be anything from Elon Musk tweeting about Dogecoin or talking about it on an SNL appearance, or maybe a 30% move in Bitcoin in a day. It's something that if you're either excited like crazy about or you're scared to death about it. So it just depends. There are opinions on both sides of it. We're seeing smart people talk about it on both ends. It's very hard to get objective opinions. If you own it and have made money on it, you love it. If you have missed it and haven't made anything on it or are worried about it, then you think it's not worth investing in. So there's a lot left to come on this. We'll see how that comes about. So let's jump into our recap from last week. Remember, today's video is about the boots on the ground, the market day to day, week to week. Friday's video is going to be about our long-term planning, and keep an eye on that. I would like to see you again on that one. We're going to talk about your goals and how we continue to strive to meet those goals. Before we dig into day to day, let's talk about the Fed minutes. Remember, those came out last Wednesday, and after much review, it actually made the market feel better. How could that be? Because the Fed minutes actually indicated the idea that they were talking about tapering. So how could that actually be? And the idea is really simple, is that the market is finally coming to terms with the idea that we are going to have to see that happen eventually. But the idea right now is that the Fed is not totally off the mark and is not totally stuck on the idea of not paying attention to data. So the idea that we know that regardless of the need for free money in the markets, regardless of the $120 billion a month being purchased by the Federal Reserve, we know that the markets understand that that's all going to have to be unwound. And as we see right now, as long as it can be unwound successfully, and that remains to be seen, but the fact that the market didn't go too crazy about the statements on the minutes shows that there's some rational thought in the markets. The markets are starting to feel that the Federal Reserve is not too far behind the ball on this one. So okay, let's start with the day to day. We started on Monday down a little bit, digesting overnight Chinese economic data, and it was sort of pointing to stagflation. So again, we did see a Fed vice chair actually talk about the transitory nature of inflation, and the S&P 500 did bounce on that news, closed only down about 0.25%. The Dow fared a little bit better, and the NASDAQ fared a little bit worse. Selling picked up on Tuesday, good retail earnings, but that was offset by inflation concerns, soft housing starts. Positioning for the Fed minutes took place in the afternoon. We got some selling as that happened. The S&P closed down 1% for the day. The Dow and the Russell were down a bit less than that. NASDAQ was only down about 0.5%. Wednesday saw a gap down open as the CPI and inflation numbers from overseas came in hot. Fed minutes came in at 1 p.m. Central, and we've already talked about that a little bit. We did see some immediate knee-jerk reactions, but again, the market was okay with that. The S&P finished off the lows on that, down about 1/3%. The other averages mostly down. The NASDAQ actually was pretty close to even for the day. Thursday snapped back as the Fed minutes were they were digested further, as we've talked about. As I mentioned, the jobless report was good, and most importantly, bond yields. Remember those guys? Bond yields actually came back down a little bit. The S&P was up over 1% for the day. Friday came. We saw the markets keep the upward momentum going on the open, but potential tapering statements by one of the Fed presidents contributed to the rally unwinding towards the end of the day, when on the S&P closed down just under the flat line for the day. Overall, the week was a lot of volatility. At the end of the week, the S&P 500 was down about 0.5% for the entire week. Not a lot for all that action. We're still looking for a positive catalyst in this market. Remember, we've been talking about this for weeks now. We've got a lot of positives in this market that we know about. We've got a lot of negatives in this market that we know about. What's going to be the next piece that pushes us to a large move up or a large move down from here? So let's recap the positives that we know. The economy is roaring, corporate earnings are setting records, and consumer balance sheets are better than we've seen in a long time. The Federal Reserve is going to keep interest rates low for the foreseeable future. That's a lot of good to continue to digest in there. What worries this market? Well, the question is there evidence that the Fed's going to be behind the curve on inflation? We don't know that. Will a potential Fed policy mistake happen? And then, of course, we've got this idea that potentially something could happen in COVID. Doubt it, and hopefully it won't, but you never know. So that's a lot. But as you know, the market seems to continue to give the benefit of the doubt to the upside. Not without the volatility. And at times, the market's going to take certain names and certain asset classes, and it's going to take them to the chopping block like we saw last week. It's going to happen. So this week, the I word is in focus. Now, I don't mean the iCar concept that they're talking about from Apple. No, I don't mean the iPhone, but yes, of course, inflation. We'll see the report, the core inflation report on Friday. That's the core PCI price index. This is the favorite of the Federal Reserve. They like to stay on this one and really focus on that. We know that it's going to be another big jump, but remember we talked about this in the last couple of weeks. Even expected big jumps still get people's attention. Weekly jobless claims come on Thursday as usual. The market still wants to see that coming down. The numbers are still a bit dirty. We've got hopefully 400,000 new jobless claims. We've got 8 million jobs available. We've got millions of people that are still on the long-term unemployment rolls. So it's a lot to unpack. As long as we keep making progress, the market seems to be happy. Commodities took a breather. Oil rolled over as the concern that Iran may get some oil back onto the market. Demand should sop all that up, so I'm not worried about that. But the near-term move was down. Copper backed off. It's consolidating. Gold took a leg up as inflation fears continue, at least in the gold market. The dollar was down a bit as we were starting to hear some other central banks talk about them tapering. So we'll see what effect that has on the U.S. dollar. 10-year Treasury closed pretty much flat after making people fear that it would head back to that 2% level. Doesn't look like that's going to happen just yet. So that is last week, and a look at what we're going to keep an eye on for this week. Please keep in touch. As you can see, never a dull moment around here. So watch for some more special videos. If there's anything special that you want to hear about or see, please let me know. We'll see you again on Friday to talk more about your goals and long-term planning. Next weekend will be a long weekend because of the Memorial Day holiday. So we'll talk about a little bit about that on Friday. Have a great week, and we'll talk to you soon.